Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now to the show at hand.
Matt Zalk here. I'm the host of the Same Day Podcast, where I connect with top business experts and real estate leaders. Past guests that we've had on the show include Chip Gabarino of Topeka Coffee, Aaron Miller of In Tulsa, and Darren Wong, who's a local real estate expert, buys industrial properties and single-family residential. Today's episode is brought to you by Keyrenter Property Management. At Keyrenter Property Management, we are a full-service property management company helping our clients buy, renovate, and operate real estate assets. We help our clients build wealth while taking that headache out of property management. Go to keyrenterpmc.com or info@keyrenterpmc.com to learn more. I met Aaron McManus, our guest for today, through BNI. Huge shout out to BNI. He's not in my chapter, he's in another chapter, but it's a great network. If you don't know anything about it, you should look into it. Business Network International. Aaron McManus is a Broken Arrow native and dedicated local mortgage lender committed to making homeownership achievable for his clients. With deep roots in the community and a passion for guiding buyers through the lending process, Aaron simplifies what can often feel overwhelming. He's known for clear communication, efficient solutions, and helping clients reach their home ownership goals faster and with confidence. Aaron, welcome to the show.
Glad to be here.
How you doing?
Good, man.
I like that lamp in the back. Tell me a little bit about that lamp first.
You can't point out my salt lamp. That's no voodoo going on over here. But yeah, I do appreciate a little natural lighting here and there. I have no windows in my office. So
I have no windows in my office.
Yeah.
There are four of us in this office and we have no natural light.
We got to get you some background more than your spiel there.
We're moving into a new office, I think in April of next year after it finishes construction. And I think for the first time, I'm going to have a window.
Oh man. Yeah.
It's going to be awesome.
I'm way too ADD to not have a window. I can sit here for a certain span and then I gotta go outside or do something.
That old Roberts building down at like 15th, 16th in Boston. I mean, the whole thing was built maybe in the 70s when they thought that natural light was like not that big of a deal, and not incandescent, whatever these white
fluorescent
lights are. Fluorescent lights were like the wave of the future. And so they just built the whole thing with no windows. You know the building I'm talking about?
Yeah, I do. Yeah. It also reminds me of middle school and math class being stuck under fluorescent lights trying to look at numbers. Not my thing, despite being in finance. It's it's brutal.
Absolutely. Tell me, let's start with a little bit of background. How'd you get involved? How did you become a mortgage lender?
Well, it kind of happened overnight. Pretty easy story to explain. So I've been in finance for, oh my gosh, well, probably 15 years now or so. Started in retail banking.
Yeah.
Got into a gig with Tulsa Federal Credit Union, which is now We Street Credit Union.
Yeah.
They had a position that was business development for their indirect lending program to car dealers in this part of the state. So basically,
what is indirect lending?
So yeah, indirect lending. That's easy. So basically, when you go to the dealership and you get a car loan at the dealership, and you don't have to visit the bank or the branch or a loan officer, it's facilitated indirectly through that lender, and you leave with your car the same day. Super convenient.
Beautiful for the bank to outsource the underwriting with a bunch of predetermined criteria to a third party. That's a beautiful deal.
Yeah, and low overhead. They only have a few people on staff, and it's great. It's a good option. So I did basically business development for them, which consisted of just driving around this part of the state trying to get dealers to utilize their loan program, which most people know at a credit union is pretty advantageous, good rates, and they definitely take care of their member base. So spent my day doing that. Got exposed to finance managers in the car business. Kind of got a taste of their world, which, as most people would know, is a lot of hours, a lot of time spent at work. But a lot of people have success in that field. So figured I'd take a swing at it. It didn't really seem like anything that I hadn't done before as far as loan products, contracts, and selling protection products. So yeah, jumped in there, did that for 7 years. Last 2 years, I was a store manager. Worked for Chris Nickel here in town in Tulsa. Mortgage guys hate this, but It's the same job. So it's the same job. You're just helping people buy something a little bit better financially
Sure.
than, a Dodge Hellcat or something like that. So
Sure.
I love helping people. I loved helping people get in cars that they were after. And I definitely enjoy um, making something complicated easy for the client and accomplishing what they're trying to purchase, whether that's
So
through a loan or not.
I'm 41 years old. I've never bought a new car. I think I've
Yeah,
leased cars, and I've always bought used, and I'm happy to buy used. I think it's
sure.
just suits me better. But what's one secret from the car industry that our listeners should know to be smarter if they want to buy a new car from a dealership? Any
Oh,
tricks, tips of the trade?
we're going to have to burn this podcast after I say this, but it's exactly what you would expect. If the dealership presents a payment to you, ask how that payment was determined. Don't take the payment at face value. So, and I'm there's plenty of consumer awareness, especially with YouTube now,
Yeah,
as far as like how to go buy a car.
yeah,
But that's the biggest piece of advice I could give somebody. Outside of that, and again, we're gonna have to burn this after I say it, but getting pre-approved at where you bank at, whether that's a credit union or a bank, going in with a pre-qualification letter is going to be
interesting.
advantageous to you.
Because you'll generally better have if I could just speak, because
Sure.
you'll generally have better terms from your own bank than from what the dealership will give you.
Not necessarily better, but you'll be aware of what the finance
Got it.
terms would look like prior to going into their process. Oftentimes, the dealer can beat what your bank or credit union has to offer, but it's a starting place, and
Got
you
it.
created the starting place, not the dealership.
Got it. And then on
Yeah.
the first one that you mentioned, that like understand what's behind the number. What's there?
So oftentimes people will purchase cars because they like the car. They like the model, they like the color. They're not necessarily focused on the purchase price. They're focused on what they can afford, monthly budget.
Got it.
So if the dealership can determine what budget you're looking for, they'll fit you into whatever fits that budget, as opposed to what might not be, the best car for you or the best
Got it.
term of the loan, finance options, things like that.
So they'll mess with if
Um,
you have $1,700 to spend, maybe it's a lot of money. If you have $1,000 to spend, they would have they would get you into a cheaper car, a shorter term, a more expensive car, a longer term, whatever it is to make that number fit. And it may not be advantageous to you long term. It's just that it fits that exact number.
you nailed it.
Got it.
Correct.
Got
Yep.
it. Okay,
Yep.
back to mortgage lending,
Yeah.
which is the subject of this podcast.
Sure.
Um, there are many mortgage lenders out there, and realtors today need lending partners that they really feel like they can trust. What do you think sets apart an exceptional lender from an average one?
That's pretty easy for me. I think, especially being a somewhat new loan officer, I'm in the same position that a real estate agent is in as well. And that is trying to reach goals that their clients have in home ownership. Um, Unfortunately, I mean, as people know, not everybody has an 800 credit score. Not everybody has 20% down, as the stigma is. But the area that I thrive in is those deals that are harder to get done. And agents that I work with, they're in the same boat.
Yeah,
They're trying to get deals done. And having somebody in their corner with that same mindset that's not necessarily looking for the easy deal or shy of doing a little hard work, I think that puts me in a really unique spot. And the reason that I feel like I started out in that spot was because of the car business.
interesting.
Um, car loans and financing is not an easy thing to accomplish for a lot of people. It's debt to income ratios and loan to values, and people are upside down in their trade-ins, and it's a tough spot that a lot of
Yeah.
people are in. So I want to use creative financing, loosely, but it's advantageous in the mortgage business to have that skill set, and it's something I came out the gate with. So I'm grateful for it.
What are the options? You said 20% down as a stigma, and you mentioned credit scores. Like, what are
Yeah.
if I'm a 620 right now with no money down, what are my thresholds where I realize I'm going to get a break in rate at various steps? And then what are my options for looking forward to save money before I get to 20%? What are my options at 1, 3, 5, 10, 15%?
Yeah, so people get so hung up on the 20% thing, they don't even begin the financing process. And that's like that stinks. That's just I don't know where that advice came from, whether, it was our parents or
Yeah.
other people in the business. Sure, having 20% down, that's going to be awesome. The reason that number was developed was because at 20% down, you're at an 80% loan to value ratio. And on a conventional loan, which has no funding fee, you can avoid paying your mortgage insurance. So it's saving you an extra level of protection you have to pay for monthly, which could be hundreds of dollars.
Yeah.
It's great advice that was kind of passed down, but the problem with it is most people don't even start the process because they don't have 20% down. But that's not necessarily the barrier to home ownership. That's just the barrier to the best option.
Got it.
And the vast majority of people that I've come in contact with, even over the last decade, they don't have 20% down for no matter what price range they're looking for. But that doesn't exclude you from home ownership. So it's a shame that's around. To answer your question, 620 with no money down at all. Is that what you were saying?
Yeah. Let's talk about where we need to go and what our options are at various steps along the way.
Yeah. So what jumps out to me loan program wise would be a USDA loan. So USDA loan is something that loan officers don't talk about a whole lot. It's a more common product in this part of the country just because we have a lot of rural areas. But loan officers get kind of tied toward doing the basic loans, a conventional loan, an FHA loan. But USDA has a fantastic program. So USDA loans are zero down. They don't require a down payment. The threshold for credit scores is much lower than it would be on a conventional loan. So it does go down to that 620 range. It can be more difficult for an approval at that range, but it's doable. It's doable, and I've accomplished it. So, for example, like I had a single mom a few months ago, had been renting for the last 10 years. She's got 3 kids at home. Her situation wasn't great. Pretty rough rental, which, they're out there. It's, is what it is. Home ownership in her mind was unachievable. She had finished school. She had some student loan debt. So she just assumed that there wasn't any way she was going to get approved. Her score was struggling because of that student loan debt. But she was looking out in the Tahlequah area.
Yeah.
So that's USDA. I mean, the whole area is USDA. It's not a metropolitan area. So property address wise, she qualified for in the area she was looking for. She didn't have money down for a down payment. She didn't have money for closing costs either. So the way that we got her done was we had a seller provide seller paid contributions toward their closing costs, which is just a way that your agent can negotiate the contract or the offer in general. And we got her in that house, and I got her earnest money back at closing.
Wow.
So, low credit score, lower than a 600. And it was accomplishable. She's got her family moved in, and she's on the way.
Did she find her way to you through the realtor she was using, or did she find you first?
Through the realtor.
Got it.
Through the realtor. And that, I would say, and a loan officer would agree with me, it's probably 90% of your client base is going to be referral business. So yeah, for sure.
And then, so when you go from 620 to 640 to 700 to 720, what changes? Just the rate that a bank's going to give you ultimately?
Yeah, the rate doesn't necessarily change to the level that most people think it does. We're at the max, maybe 0.5%, round in there.
Okay.
And the reason for that is these are government subsidized programs. So FHA, USDA, VA loans, like there is an incentive there provided from the backside so that the rate doesn't fluctuate to an extreme. Now, a conventional loan, you will see a pretty large swing based on your credit score and debt to income ratio and things like that. But the vast majority of consumers, they're not getting conventional loans. They're using these government programs and have for a long time.
So you distinguish government programs, USDA, FHA, from conventional, which is Fannie and Freddie, which are also government backed at some level because they
on the secondary market.
Secondary market.
Yep.
Yeah. So those are essentially packaged up as CMBS and sold into the CM as
Correct.
collateralized debt obligations and then sold
Yeah.
into the CMBS market. I
Yep.
guess. So you don't call that government. You call those conventional. Okay. Yeah.
Yeah, conventional loan. Yeah.
Yeah.
The dead giveaway that I tell people, whether you're looking or comparing loan programs, if there's a funding fee, it's a government subsidized program. So they all have funding fees. They're all different amounts, but they're there. That's the first dead giveaway that you're in what I would consider, an incentivized program.
Yeah.
Yeah.
Interesting.
Yeah.
Um, I've known you for a while, Aaron, and I've heard about your reputation and what I've heard is that you are known for simplifying complex financing situations and getting buyers to the closing table quickly. Can you just help us understand how you've built that reputation, how you do that?
Yeah. So I think looking back at my career, I think the success that I've achieved has been from educating the client during the process. And I won't sugarcoat it. I mean, like the mortgage process has been overcomplicated since the housing crash in '08.
Yeah,
There are lots of regulations, there's guidelines to follow. We have a lot of stuff that we have to know on the backside. The client doesn't need to know that. They need the basics. And if somebody is willing to explain them on an education level through the process, they come out the other side and they're helping their friends, their family get into loans at the same pace.
mm,
But when you first enter the process, it's daunting. Like it's overwhelming for people. And having somebody who can break it down in the simplest of terms and then educate them through the process, you're making them a pro by the time they come out of it. And oftentimes they're buying a second home, they're buying an investment property within a few years of that, if they're well educated by the time the process is completed. It's just not as complicated as people make it. Yeah, it's scarier than it looks.
I remember buying our first house in Tulsa, and my wife was like, I mean, she signed all these loan documents. It was conventional. She signed all these loan documents, and we walked out of that closing room, and she was like, I never could have done that without you. Like,
Yeah.
I just never would have. I would have
Yeah, and to
rented my
keep and
whole
to keep
life.
it all straight, yeah, it's
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 a
tough.
lot. I mean,
Yeah.
even a conventional loan maybe is slightly less complicated than FHA or a USDA zero down payment. I'm sure there's more stuff you got to sign for those, but like
Yeah.
there's a lot of mortgage, a full mortgage packet and a closing document is a lot of paper and a lot of
Yeah.
signature.
Yeah. And from my exposure to it, I feel like that post '08 era, the level of disclosure up until closing, like for example, a 30-day closing time frame, it's tedious. It's a lot. If there are changes that occur as you have a new loan estimate, you've got new disclosures going out. And at some point, most of the time, the client or consumer just ends up signing it, not even knowing because they get sent
Sure.
something new, every week. So I think my other advantage that I have is my level of pre-qualification is typically a little stricter than I think a lot of like internet lenders and things like that would
Yeah.
be.
Yeah.
So what that results in is once they're under contract and they're on their way to buy a home, after selecting the property, I don't have to ask them for as much as, you would have on like if you're doing Rocket or something like that. So I prep them up front. They're well aware of the process. Once they're in the process, they don't really see a transition. So it's just kind of par for the course at that point up until closing, which hopefully is fast.
Yeah. Interesting.
Yeah.
For those of us that own real estate and we've traditionally bought through commercial loans at our local banks, is there a path for us to use our 10 golden tickets as we talk about it in the industry, like to use our conventional mortgages and continue to buy houses? I mean, is that
Oh
straight through
yeah.
you? Do I just bring a
Yeah.
deal to you and say, here are my W-2 stubs. Can I do this?
Yeah. And that's, I mean, I got a great example of that. You actually helped me out with the deal a few months ago. A client that I had been reaching out to for well over a year after she had closed her first loan, um, she was very interested post that first process in buying another home and renting out the current home that she had just bought. She
Mhm.
lived in Midtown, pretty conducive to renting, in that area, especially in the Brookside area. But just telling her, yeah, you can do this and you can use people you can use your realtor again, you can use your loan officer again, and you can buy an investment property. So, what most people don't know, especially for a conventional loan, is during that process, you not only have to do an appraisal on the property that you picked up, but you also do a 1007. So the 1007 is like an additional side appraisal. And that is the appraiser determining the potential rental income that you could get from that property.
Interesting.
What people don't know is that potential rental income offsets the new payment.
So let's run through a simple scenario. My new house, I have a house. I'm going to move out. I'm going to buy a new house. The old house is going to rent for $1,000. The new house cost me $2,000. Now I only have to get approved for $1,000 of kind of ongoing expense.
Yeah, you're even not even the existing rental income, but the potential rental income helps you purchase that investment property. If you're leaving a property behind, we like to see, a tenant moved in and a rental agreement, to offset that existing payment. But on a new purchase for specifically an investment, it can be offset by that rental income. And depending on if you can afford, to pay the payment, that's one thing. But having an additional $1,000 in rental income to offset that, whether it's a $2,000 payment, that's night and day.
Yeah.
Like that's, it makes it extremely, extremely doable. So people forget that, you can utilize your circle and you can keep moving. You can build an empire from where you start at. So yeah, it's cool.
I got to get back to my golden tickets. I haven't used them all.
Let's cash them in, Matt.
Let's go. Aaron, you strike me as the kind of person that's calm in the storm.
Yeah.
But it doesn't stop or it doesn't mean that there aren't tons of hiccups and things that can go wrong in the average real estate transaction. There's, title work can get screwy. There are down payment issues. One that comes to mind is like, you get an influx of money from somewhere, or you spend a bunch of money and all of a sudden the money, your bank account statement doesn't look as clean as it needs to be for a conventional or for an FHA or USDA loan.
Yeah.
There are rate changes that can happen that affect the monthly payments and qualify you or disqualify you. And there's a bunch of other things that I'm sure I haven't thought of, but how do you work with realtors and their clients to remove obstacles and keep transactions moving smoothly when some of these things, when a sharp left turn hits you?
Yeah. The thing I always tell clients headed into the process, things can seem, bright and shiny and everything's great, but I tell them we're going to hit a roadblock.
Sure.
The mortgage process, the real estate process is inevitable. Whether you do an inspection and you come up with issues on the home, sourcing funds for the down payment, there is going to be a roadblock. Underwriting is going to have a question for you, despite best efforts. But it does fall back on what I said earlier. If I've done the level of work I needed to do to provide that pre-qualification letter, there shouldn't be issues. And a lot of that falls back on the consumer because they have to be willing to dig for the documents that are needed to actually close, not just to go shopping, but to actually close on the loan. And that's a source of tension between loan officers and the consumer out there trying to buy a house.
Yeah.
Most people want to do the fun part, which is go shopping. And, that's for an agent, that's the fun part too, is to go find a property and meet with them and do showings. But the pre-qualification for financing for that purchase, that's really, really important. And whether or not they relay the importance of that up front can determine how smooth the process is once a property's, been identified. But to answer your question, roadblocks are coming. I tell clients that it's going to get a little bumpy at some point. If it doesn't, fantastic. We'll swing on into the closing and we'll cross the finish line and be happy. But the roadblocks are more than likely coming. We'll cross them as they come across the game. So I always tell people too that we're going to get you to closing. And I'll knock on wood for that. Well, we'll get you to closing. If I have to drag you there, I'll drag you there. And I can't tell you how many clients got to that closing day at the title company and said, you were right. You had to drag me a few times because the client wants to give up because people don't like, digging into their finances and pulling bank statements and calling their 401k provider. And they don't want to do that. And there's only so much I can do for them.
Yeah.
But that's also what separates me is I am willing to go into that next level to get them across the finish line.
Have you come across any challenges lately that you had not previously seen that you were like, whoa, that's a new one?
I think the level of minute details in the guidelines for underwriting. I knew there was a
Interesting.
lot of rules. I knew there was going to be a lot of hoops to jump through, but I mean, I came from the car business, so there's a lot of creative financing going on that
Yeah,
side of things. But this is complicated. And it's not just providing one thing because that providing one document requested can open the door to 10
sure,
other questions.
sure,
So
sure.
knowing, the next step ahead puts you in a way better place, makes it easier experience for the client, but it's definitely tougher on that part. But to be completely honest, getting the business and prospecting has been the hardest part.
Mm,
And that's I mean everybody experiences that, and it's in a way I started my own business, and when you start a business nobody knows who you are.
sure,
So in the world I came from as a finance manager, you're sitting in an office, the clients are coming to you.
sure. Yeah,
It's the sales staff, it's your team that are
yeah,
bringing the clients in off the street, highly competitive, but they're bringing them in. So I hadn't been on the street level in well over a decade. So I think the learning curve, I'm used to the finance portion, but getting,
the hunting is
yeah,
challenging.
hunting and
Yeah,
prospecting and building your business and being in the right place at the right time. And other loan officers will agree with me. There's a certain amount of luck that comes
sure.
into this job, and that luck is being in the right place at the right time, saying the right thing in front of the right person, and um, yeah, that's been the hardest part for me
Yeah.
for sure. Yeah.
I
It'll
used to
make or
have
break you.
Chris Lyle got me a framed image because
Yeah.
I told him I loved it, and it says opportunity is missed by most people because it's dressed in overalls and looks like work. And it
Nice.
reminds me of that. Like
Yeah. Love
you got to
it.
make your own opportunity with a bunch of hard
Yep.
work, and there's a good amount of luck in any of our successes for sure.
Yep.
Um, Speaking to the realtors that may be listening to this podcast, what's one thing that they often mention that they wished a mortgage lender would do better, and how do you try to deliver on that
Oh, that's easy. It's
desire of
just
theirs?
communication. It's communication.
So some
And
mortgage lenders have a tendency to just to go dark.
oh yeah, they go dark. And the reason for that is a lot of loan officers view the relationship between them and agents as like lanes on a highway.
Yeah,
And each of them need to stay in their lane kind of thing. The problem with that is it literally is team effort. It
yeah,
takes two people to get that client to the closing table. And those people have to work together, whether that's daily or weekly. It's necessary. And I think the biggest miss that a lot of the agents and loan officers make is having that relationship with their loan
mm,
officer in the sense that they can call them and they want to call them.
yeah,
You'd be shocked at how many times I hear from agents that, and I don't want to speak badly about anybody, but answering the phone is a huge predictor of your success.
yeah. That's interesting.
And on both sides. So having that accessibility, and I'm not married, I don't have kids, so it's not rocket science for me when the phone rings to, pick it up or call people
Yeah,
back or
yeah.
whatever. That puts me in a unique spot too. But yeah, you'd be shocked how many agents complain about just not getting their mortgage guys or girls to answer the phone.
So
It's tough.
that's a great little segue. If a realtor is looking for a lender who really supports their clients, what's the best way for them to connect with you?
So obviously the easiest way is to just give me a shout. I'm on social media. I'm easy to find. My website, approvedwithaaron.com, super easy to find, super easy to remember. I think that after that first connection is made, and I'm open to meeting with literally anybody, but after that first connection is made, I have a lot of processes in place
Mhm.
that I think most agents right out the gate they're going to appreciate. And it's a pretty easy pitch at that point to maybe provide value to them in their business to grow.
Cool.
Yeah.
And what's one thing agents can do right now to get more buyers qualified or better prepared for the time that they need to chat with you?
Yeah. I would say there's not necessarily something they could do to help them prepare. I think the biggest step, and most people would agree, the biggest step is just an application. A huge advantage that I have to working here at the Mortgage Link is I can get an automated underwriting approval, which is, in a way, AI, an AI underwriter. But I can achieve that level of approval with a soft inquiry on their credit.
Nice.
So, I mean, that's becoming less rare, but for the last 5 or 10 years, that's been hard to get. Most lenders want to do a hard inquiry out the bat, and that's going to lower your score. That's going to tip the rest of the country off that you're shopping for financing for not only a loan, but for a home too. The spam calls, the junk mail, it all just starts flowing at that point. So the fact that I can,
so they all those little spam bots can track that you've
oh yeah,
been shopping for a home loan?
Yeah. So they're trying to pass basically a law or a regulation against that. But what those are called are they're called trigger leads. So that hard inquiry on your credit, other lenders in the country have access to those trigger leads.
Got it.
So, and I don't want to badmouth Rocket Mortgage. It's pretty easy. I don't know anybody that works there, but they track those trigger leads and they'll call within minutes of me doing a hard inquiry on a client.
Wow.
Yeah. So I tell people it's like flying under the radar with me. We can do a soft pull. I can get an approval. I can get you far into the process. And then you can go shopping. And then I don't have to do a hard inquiry until we're under contract and we're headed to closing. So big perk on that for sure. Yeah.
Love it. Aaron McManus is a Broken Arrow native and dedicated a local mortgage lender with the Mortgage Link. He's committed to making home ownership achievable for his clients. With deep roots in the community and a passion for guiding buyers through the lending process, Aaron simplifies what can often feel overwhelming. He's known for clear communication, efficient solutions, and helping clients reach their homeownership goals faster and with confidence. Aaron, we appreciate you being on the show.
Yeah, love it. Thanks, Matt.
Take care.
You too.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.